Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin, and Dennis Dick will be with us in a couple of moments here, but we got a lot to get to on our show. Of course, a happy Veterans Day to everyone. So the bond market is closed, but volatility overnight in China. We'll talk about that, and Singles Day is probably the lead story of the day outside of that general Hong Kong volatility. I guess $30 billion was not enough for Alibaba, so we'll talk about that. We'll talk about Apple getting some hate, I guess we should call it, for their Apple card, Apple credit card there. Some hate from a few key influencers on that. We'll talk about, Disney. How can you not talk about that? I just can't wait for Wednesday to come. So Disney Plus launches, and we can never talk about Disney Plus ever again. Light on the earnings front today, but we do have a number of big names reporting later in the week. This is kind of the last big day or big week of earnings season for the year here. Our guest today, Ivan Feinseth. He's a partner and CIO at Tigress Financial Partners. He will join us at 8:35. Joel, what is the word here overnight? As I try to unmute you, 1 second. Joel, try unmuting yourself. There we go.
Good morning, traders. How you doing? On this Monday morning, we have the S&P futures in the red by 11 3/4 handles. Had a strong close on Friday. We closed at 90.50, but peaked Sunday night at 92 1/4. Slow, steady sell-off here. Pre-market low 76.75. We could talk more about the technicals when Triple D comes on, but very, very tight range in the S&Ps last week. So buyers and sellers coming together. Little consolidation. Crude in the red by 59 cents at 56.65. Gold up a buck at 14.6390. Silver in the red by just a little under a penny at 16.815. And Bitcoin loses 9,000. It's down $105 at 8,740.
Bitcoin was supposed to be defensive.
I don't know what it is.
I think that's what everybody doesn't know what it is, how it's correlated. It's not correlated, we'll give you that. So, but I don't know if it's defensive either. So, come in and China's destroyed. Not good news.
No. And
the riots, is that so? Is this okay? So update me on everything. I see the FXI come in, it's down 2.1%. That is giving back. China's been on a little bit of a tear here. It is giving back over half of its gains here basically in one day. So of last week's gains when we were up 4% in China, we're giving back over half of it being down 2%. Let's what's the deal here? Why are the riots bringing us down so much?
Two things as best I can understand it. Okay. First of all, so they've been rioting for months. We know this. Been protesting for months. They typically protest on the weekends. Typically, right? These latest protests kind of spilled over into the work week. So that's number one.
Okay.
Number two is police were using live ammunition, shot at protesters, and 2 people are in a critical condition. So they got a little bit more violent.
Wow. So obviously this is bringing down all your emerging markets. Direct hit is FXI with Hong Kong, but if you look, the EEM is obviously trading down 1.4%. There's a ton of these. You can look at VWO, which is going to be trading down. It's only down 2 cents right now, but there's no bid. So this thing's going to probably be down 1% as well. And obviously a lot of Chinese stocks are going to be down here too. Alibaba's trying to hold up. Obviously, we had a record Singles Day. Let's quickly talk about Alibaba. I do have a trading position in that one, and obviously have long-term investments. So just let us know how Singles Day went.
It went well, but I guess it didn't go quite good enough here.
No, I think it went. It's down only 0.3% when China's trading down that much. I would think that this actually went very well. I would think this would have been way up if not for China.
All right. Its total sales surpassed $30.5 billion, or 213.5 billion won. That sales growth rate is likely to fall short of estimates, but still, I mean, that's a lot of money.
And I think the main thing here is when it's only train down this, usually it follows the FXI very closely. If you look at Alibaba, FXI put them on top of each other. Babas have been outperforming a little bit here because Singles Day was coming. I think it was a good day. I think it's just a matter of everything's hit over there, so that's why it's trade down. So the bigger market bringing it down.
Well, also take into account that the week that Alibaba had last week, right? You know, in anticipation of Singles Day, you ended, let's see, last Friday at 176.46. Excuse me, 179.69 was your close on Monday. So we rallied over 10 points last week. So the anticipation of the event here, people played it beforehand and. Now maybe taking profits.
I don't think so, because when JV Spec making the point too, and you guys aren't grasping it here. I can tell I'm wound up here this morning, but FXI is trading down 2.1%. EEM is trading down 1.5%. BABA is only down 0.36%. This is basically an update for BABA comparatively. So if you were putting this trade on, you always want to like leave yourself, hedged up. It worked. I mean, Alibaba is outperforming the index significantly. I mean, when you get the FXI down 2.1% and Baba's basically almost flat, that's an impressive day for Alibaba. So I think, obviously, I'm long the stock. So, talking my book, which I don't normally do, but just my thoughts here is that this isn't that bad of a day here for Alibaba.
It's not that bad of a day. If you bought the stock,
if you were going to come in and say that the EM or FXI was going to be down, 2.1% the FXI, would you not think BABA is automatically going to be down even more because the beta is high? So sometimes the FXI goes down 2%, BABA will be down 4%. So whatever, it's actually pretty impressive. The stock holding up this well. So right. And especially considering the run up that you just said too, I'm impressed it's holding up.
Still it's holding up well, but I'm just talking for the people that maybe bought it for a trade on Friday. I'm not talking about
that worked too, though. JV Spec saying that worked too because you would pair it up. Normally you would pair this up because JV Spec saying the BABA EM trade, you're making money on that. Because
if you were long the BABA and short the,
but that's how you got it. And this is what we talk about with relationship based. You got to take out the market risk. So, when you're trading this is stuff we're going to talk about next week. So just flat out buying Alibaba is gambling because you have the macro risk. When you pair it up like JV Spec says with EM, it works. If you did it with EM, you're up 1% on this right now overnight, just from the Friday. And if you did it with FXI, you'd be up 1.5%. It's a huge move from a pairs trading perspective. You got to hedge.
Let's just see if I could go green today. I mean, it is on a relative basis holding up well. I just look at the close from Friday, 187.16. That'll be if we go into rally mode in it. And then the last two highs on Thursday and Friday were over 188. So keep an eye if you get back into the 188 handle. You had your two highs, 88.07 and 88.28. I'll give that is, now that we're trading in the red a little bit, I give that 3-star resistance. On the downside, wow, you almost had matching range days on Thursday and Friday. Parallels at 185. So that's going to be, I'll look at that for the week, 185 to 188. Bust above 188, maybe make a run at 200. We break below 185, maybe get back some of those gains from last week.
Okay, so light earnings day. We're coming out of the heart of earnings season here, but let's kind of just recap before we start going into more individual stories. I know we're going to talk Disney Plus coming, but let's just talk the overall market and let's look quickly at the top 10 components because it's such a good exercise. I like doing this exercise on the Mondays as well because it gives you a feel for, really, okay, you can look at the S&Ps and say, oh yeah, we're down, a point here today on the SPY or 11 handles if you're looking at the futures. But let's just break down the technicals on the top 10 components quickly, because I think we have some time for that today, don't we?
Yeah. And, it's funny. I update my list on my front page, every week or so. And I'm just like, you know what? I bet you Dennis might want to mention this today. So today I did. It hasn't changed much in the top. You still got Mr. Softy at the top. Let's see what Mr. Softy, if it's ever.
Unbelievable Friday.
Look at that. Look at that consolidation.
Breaking out.
Here.
And we've been talking about this one. I mean, it's been in consolidation station. This thing looks like it's got 150 written on it. I mean, here's the market too. We're getting hit pretty good here. It's not even down as much as the market. So Microsoft has just been resilient, holding up, but people are looking at this to buy on pullbacks. This is a stock I'd be buying on pullbacks right now. If you're a trader, this is the kind of stock you want to own here right now. I don't own it. I wish I did. But on pullbacks here, this looks like it wants to go to 150.
If you want to tighten it up here, what do we trade? We're still trading in a 145 handle, not down much. Matching lows from Thursday and Friday, 143.75. There's your major level on the downside. On the upside, can we take out that all-time high and all-time closing high right next to each other, 45.99 and 45.96. So just be aware above 146 there. You're in no man's land. Apple, give us the news on Apple here, Spencer. It's not earth-shattering news, but when the former co-founder of the company makes accusations, it should be noted.
It wasn't just Steve Wozniak. There were a few people that came out. David Heinemeier, Heinemeier Hansen, excuse me. He's the creator of Ruby on Rails. That's a big coding language. Him as well as Steve Wozniak came out basically critical of the Apple Card. When you have a financial service that lends based on an algorithm and no one is quite sure how that algorithm works, this is how this happens. So they criticized it for being discriminatory. I think Wozniak said he could borrow twice as much as his wife. And when it's looking at all these different facets of your life, this is a possibility. So there's no transparency on these algorithms. There's no way we can say for sure whether it is or isn't discriminatory because nobody knows how it works. But critical here of Apple's credit card, which is brand new, by the way, for being discriminatory and not being transparent in how they offer money.
Sells off 3 points just Friday morning significantly, and within an hour it's getting it back, and the stock closes right near the highs. The stock is still completely in an uptrend. I expect dip buyers below here again. I mean, it's not even down, significantly. Once you consider the market impacts and you consider betas, this is hard. This is just in line with the market as well. So I don't think they're really hitting it hard on the news. I mean, it's just a stock that's, again, just like Microsoft. This stock has been unbelievable. Like Microsoft has been kind of in consolidation station. This just been running. I don't know if I want to chase it up here. I own it in the long-term portfolio. I'm very glad I did. Jim Cramer always says, own Apple, don't trade it. I like to do both. I like to trade it and own it, which I think is better. But anyways, it's been an unbelievable performer.
Not much to look at here. All-time closing high on Friday at 260.14, pair of highs just under 260.50. That's all you really have here in Apple. Little disappointed in the iWatch class that I went to yesterday. I'm figuring this thing out, and the people in the class actually knew less than me. So I guess I know a little bit more about the watch than I think, but I'm getting it to work. Pair of highs, like I said, all-time high on Friday, 60.44, all-time closing high, 260.14. Might have a little seller in the 260 area. Let's move on to the combined third highest component, the Googster. I go with the Goog without the L, but I know the people like the L, so I'll do Goog L.
When you add them up, is that where it is? It's still third?
Yes.
Okay. Oh, yep. Combined. Yeah, you said combined.
Combined. Yeah. 13.22.65.
This looks strong too.
Yeah.
I mean, it's just been running. Fang has been strong, besides the Netflix rally, which actually has been okay too, holding up a bit, which we'll talk about in a second, but I'm still nervous about that one. I mean, you look at this chart I don't see any weakness here happening in Google. I own in the long-term portfolio as well, but this has been a big performer here too for the last month.
Amazon, a little bit of a laggard is late. I remember looking at the $1,800 level here. We're just hanging out for Amazon. We traded down a little bit in the pre-market.
It's a victim of the valuation, though, because we've seen this trade and we've talked about the growth to value trade come on, and Amazon is still seen, obviously, as more of a growth stock and more of a high PE, high beta stock. So it's kind of pooled in with, the stocks that have been out of favor. So I think that's more the reason than anything.
Yeah, I mean, major resistance. I mean, I'm not looking for a run back to 2K until you can clear 1850. That was the roof back in September. On the downside, Friday's low may come into play, 1774.04. But these $1,000 stocks and the wide markets, I think it's very hard to trade these on
Tricky.
a strict technical basis. Facebook hanging out here at 190, had the earnings report, has faded a little bit off the earnings report. I don't know, 189.50. I'm not getting bearish in this thing until you breach 189.50. Kind of faded off the earnings for this, but
I
really
think you
not in
gave
any trouble.
perfect number, Joel. I agree. 189.50 because they go 189.70, the low from Friday, so a little double bottom in there.
Yep.
That's where it needs to hold. It's trying to hold in the pre-market. Let's see if it can take it out. I mean, you got some market weakness. Does this area get bought? But that's the key level for me too here. Still own this one, the long-term portfolio, not selling it, but 189.47 is critical for the stock to hold.
Brick B, man, it tried to make an all-time high last week. Turned back at 223.37. Warren sitting on a wad of cash. I did read in Barron's they're thinking about WBA as a possible target. That's just from Barron's. Is that trade?
They were talking about this the last couple of weeks. They've been talking about WBA potentially going. Wasn't it private, Spencer?
Yes.
So and you saw the run up and it's come back in. I mean, value stocks back in favor. CVS has been running. I don't mind it here. I think you stop out at the low, 58.08, Friday's low. If you're trading on the pullback, maybe it gets a little pullback with the overall market here today. I don't mind the setup a bit. I mean, you had the run and you've come back down most of it. So as a trade, doesn't look that bad to me.
They were talking like $80. I'm just telling you what Barron said. I'm not telling you.
I'm surprised it's not trading up more if that was in Barron's.
I know.
But I guess this was already out there. So
right.
It is trading up on a down day because it's trading up 26 cents. But
and CVS had that
it's
nice
the kind of stock if I'm trading, I'd be buying on a pullback or even buying here.
JP Morgan, new all-time high last week, 131.29. It's almost $100 where I told you not to buy it.
Yeah, Joel, you're gonna get it cheaper, he says. You're gonna get it $2 cheaper. I tried to save $2. I missed 100.
Maybe a 6-for-1 stock split or something. You know what's interesting about JP Morgan, and we got the FinTech awards and stuff, and just some of the stuff I've been reading up. They're working hard in that FinTech arena. I mean, not only are they looking at the traditional ways of banking, they're moving forward. They're going to be participating in our conference. 130.38. That was your all-time closing high, down 50 cents from there, right? That's the all-time closing high. All-time high, 131.29. That's all I'm mentioning is all-time highs. Johnson & Johnson, I mean, if you want a headline stock to trade, here you go. That's it. Talcum powder on, talcum powder off. Let's see. This one, I don't know. It's been in a range. I mean, it spikes down and spikes up based on that news. Well below its all-time high. I don't know. This is really for a big cap stock. This does have some pretty wild ranges and pretty wild days.
Like you said, it's headlines that have been driving it around lately, and we've seen obviously the talcum powder issue. So there's still risk of headlines in this. I used to, make a little bit of markets and do some stuff, and I'm so scared of the headlines right now. I've taken it out of my system. So I think you've got other market makers probably doing similar stuff. So it's scary. It's a headline stock. You don't know what the next headline is going to be.
Visa is snuck into that.
Really? It's in the top 10?
Yeah. Yep. Visa has stuck in there. Just consolidating near all-time highs. Had to run up for October, early November. Just pulling back here. Just consolidating near all-time highs. I mean, I don't know really what to say. I would 180.65, just like the market made a new all-time high on Friday. Then, look for or not all-time high, but just look for the highs on Friday as targets. A couple closes in the 178 handle. So keep an eye on that. 78.43 and 78.97. So there you go for Visa. Not much to look at. PG, a little bit of a victim of the rotation. Yep. I don't know what hit it the other day.
Rotation. Everything got hit that day. That was like we're selling those defensive XLP components. You can look at the XLP that day. It had a really rough day there too. Even Coca-Cola was trading down significantly. PG was a poster child that everybody's, sitting in, safer spots, and the market didn't want to be safe, so they were coming out of the market, and the defensive trade came off significantly. You can look at the XLU that day that XLU keeps going down. The Procter & Gamble had that bad day. So you know what? I look at this chart on Procter & Gamble. I don't like it at all. I mean, if you think this market is in bull mode here, this is not the stock that a money manager is going to be piling into. And often you see a big move. You see 3-4 days where people are saying, okay, that's the bottom, and then see a continuation of the initial move. And that initial move is down $5. I think this thing could be at 114.
Hey, take a look at that, Spencer. Go to the monthly on this one, because you've had really no significant red bars in this thing going all the way back to early 2018. I mean, I do see a few other red bars there, but so far this bar for the month is really sticking out to me here. That's a big red bar. You had this back in 15, and then you ran into a lot of red bars here. But, we still got the month here. We still, not even halfway through the month, but just, be aware. I would look at the close from last month and use that as a determinant. 124.38. That's how you ended October. And what are the highs for the month so far? The highs for the month, you snuck over that area, 125.14. That was your high on the first. So big red bar so far working on the monthly candle. Procter & Gamble. ExxonMobil, haven't talked about it much lately, Dennis. Been moving up with oil here. You've seen the hit of the roadblock here. I call 73 major resistance.
Yep.
We're too far away to probably look at the book there, but 3 highs in a row. Tuesday, Wednesday, and Thursday, all at 73. So no more ripping upside till you close over 73 in ExxonMobil.
That's through the 10 components. You know what? They didn't look that bad. The only one I didn't really like was Procter & Gamble.
Procter & Gamble. I agree with you.
Hard to get bearish here. When you go and you break down, you look at the internals on the top 10 components, it gives you a really good feel. And I mean, Microsoft look good. Apple still looks good. Obviously Amazon weaker just because of what we've been talking about, the rotation a little bit there. But Google, I mean, those top 10 components still look pretty healthy. So despite today's sell-off, which, we'll probably get that CNBC will have a special run in here if we continue to sell off markets in turmoil because we're down 0.5%. But I mean, this has just been an impressive run here, and I think we're still in buy the dip mode. So I'm not getting nervous because of the protests in Hong Kong.
Exactly. Or because of Steve Wozniak saying Apple discriminated against his wife. I mean,
and Apple's hardly trading down on that too. So, but it's something to think about.
What about the tighter range last week? How about the consolidation of the ranges? Only a 34-point range last week. So, when you get periods of volatility, you calm down, you get in, things quiet down, you get consolidation, and then you get another move higher or lower. The fact we had a 34-point range last week makes me put more emphasis on the weekly low. I don't think I get real bearish until we get below 15 handles from here. We actually are. I like to do a weekly number. We are trading below that because we had such a strong close on Friday. So this 30-80 handle is going to be important, I think. Today will be a little bit slower, but Monday, Tuesday, and Wednesday, can we work back up to that 30-80 area? Can we close above Friday's close at 30-90-50? So a couple factors working there, but today a little bit of a lighter volume day. Raz is piping up here about Tesla, and
it's up again.
Yep.
What about that Einhorn? Can we read that Einhorn letter? Was that on Friday? We didn't talk about it on Friday, did we?
No, because it was midday.
It was midday. I want to talk. This is good. I actually read this letter to my wife, and she laughed out loud. Can we go find that Einhorn letter and just read it?
I don't want to read it to you. You want me to read it to you?
Yeah, read it. It's only going to take you a minute to read it. It's hilarious.
All right, I have to go through.
It's fun to read.
So not the Einhorn. So I want to read the Musk response to the Einhorn letter. That's what I want to read. Not Einhorn. I want to read Musk's response to it. So if you go on Twitter, Elon Musk tweeted basically. He's
not tweeting anymore, though.
Well, okay. Well, I don't know if he tweeted it or where he sent it, but I read the letter and it was awesome. Just read it. I cannot put it in better words than Musk did. So you know how he likes to rub things in when he's right. So just Google Musk response letter. Unicorn. He called him a unicorn.
Which is you
want me to read it? I've already found it.
Yeah. I don't know. I don't know what you want me to read. Which is the one that you want me to read?
The Musk response.
All right, I have to go in.
So David Einhorn, just to sum up what he's responding to.
Okay, so David Einhorn tweets. So no, Elon Musk started it, first of all, and then Einhorn responds, says thanks for the shorts.
No. So Einhorn started it because Einhorn in his meeting to his shareholders basically was accusing Tesla of basically almost cooking the books.
Right, but I meant Elon Musk started the one-on-one part of this thing because Elon Musk responded directly to David Einhorn.
That's what we want to read.
Okay, so dear Mr. Unicorn,
this is Musk to David Einhorn,
and this is on Twitter. Fabulous name, by the way. That's what he said. We read your Greenlight Capital Q319 investor letter in which you make numerous false allegations against Tesla. It is understandable that you wish to save face with your investors given the losses you suffered from Tesla's successful third quarter, especially since you've had several down years in performance and a sharp drop in assets under management from 15 billion to 5 billion. You have our sympathies. We also recognize your desire to feel somehow relevant with your Tesla short position at a time when your friends in the Tesla short community have been noticeably recoiling from the public discourse as the world is increasingly recognizing Tesla's contributions to science, safety, and a sustainable environment. Hold on, let me extend.
I know I haven't seen a lot of Tesla Q running through my Twitter account lately,
right,
so I agree with Musk. They have definitely, the shorts have been quiet there.
All right, I had to extend the picture. To the extent that you have any desire to learn about the amazing progress the people of Tesla are making, I would like to extend an open invitation to meet with me to discuss Tesla and tour our facilities. For their sake, I'm certain your investors would appreciate you getting smart on Tesla. Finally, please allow us to send you a small gift of shorts to help you through this difficult time. And then
I love it.
Einhorn responds, thanks for the shorts. They came with some defects, and I guess they're going to meet. I don't know.
They came with some defects. That's a good response there, too. So we got some drama there. Einhorn versus obviously Elon Musk. So it's always interesting when Musk, he's very outspoken. That's always what everybody's been critical of. But this was all kind of just poking fun at the shorts. I mean, he blew it away last quarter. We talked about it, and it's been holding up. Here we are. We're trying to break out again. I mean, what is the short interest still on this, Spencer? There is people who are puking this out right now from the shorts. I'll tell you that. That's why you're seeing it just does not want to sell off.
28%.
There's a lot of people still short this stock, sticking to their thesis. And you know what? Once the company starts making money, there's a lot of holes in that thesis. So again, Jason Rasnick was on this show a lot of times. We've had a lot of people on this show saying good and bad about Tesla, mostly bad. We've talked about it that I've always, liked kind of the story to a certain extent. But I've never had the really guts to go out. I wrote some puts and I played it that way. I've never had the guts to really jump. I have actually had the guts. I bought it and then I've sold it because I'm just too nervous holding it flat out. But I mean, this stock has been an unbelievable performer here this year. Really, at least in the last 6 months. And Raz has been right.
It's kind of tricky from a technical perspective because there's nothing up here. You're taking out the highs from last week after the bull run. You're trading up in the pre-market. So I'm just going to say, for the Tesla bulls up there, show me what you can do at 350, right? Here you are. You're trading at 340. You're trading up in the pre-market. Market's down. Some news, not great news. To me, what I would like to see is boom, 350, 150, 352, pair of highs right there. Another one at 48.80, just 350. I mean, there's nothing, I can't give you a number when there's no number there. And there's no number there until 352, rounded off, call it 350. That's $10 away.
One thing that I kind of can't wrap my head around is I was thinking about this with regards to Tesla is so one way or the other, right? Whether Tesla goes to 0 or goes to 20,000, right? And everyone has a Tesla. One way or the other, it's going to seem extremely obvious after the fact that
for sure
that was going to happen. Just like it seems obvious now that Amazon was like the best company in the world in the late 90s and early.
Oh yeah,
it's going to seem so obvious.
Everything is obvious after the fact,
right? I know, and that's why it's funny. But now it doesn't seem obvious.
I mean, I look at where I was in May, and remember, I put the non-bankruptcy trade on. And Jeremy Newsom was in this trade with me too, I believe. We talked about it, and I was like, I think, I don't know what the story here is, but I said I think if the stock went low enough, I think there would be a buyer. That's why I don't think it's a zero. So many people were saying on the media that it's a zero. I disagreed with that. I put the non-bankruptcy trade. I wrote the 120 puts. I got 20 points. I went out, 23 months. So I went out a long ways, but I got 20 points for the 120 puts. So, the person that's buying that is basically saying it's got to go under $100 in the next 23 months. This was when the stock was $240. So obviously now, I've covered because the stock has went up, and I maybe should have never covered, but I was going to reemploy it and I never did, or redeploy it, I guess you'd say. I never did. But in a pullback, I'd love to write puts on this thing again. I think this story is not going away anytime soon.
All right, let's 8:30. I'm not sure if maybe a little selling balances there, Dennis. I know they're coming out at different times here.
8 o'clock. They come out at 8 o'clock.
8 o'clock. Okay.
Yeah, it's still on NASDAQ 928. They don't give you a lot of notice on NASDAQ, but on New York, they come out at 8 o'clock here now. Okay. General Electric 182,000 to sell. It has just been a monster. Every single sell and balance every morning is getting bought, and it just continues to run every single day. This has just been an incredible run here for GE. Again, poster child for lower price stock or lower multiple stocks and laggards, as opposed to child for how well the laggards have done in the last few weeks too. So that's why it's done very, very well. Hewlett Packard has 50,000 to sell. I just want to mention it because there was a lot of headlines. I did sell my HPQ there a couple of days ago. And the reason I sold it was in the long-term portfolio, and the reason I sold it is I am nervous that they're going to flip this, because the way it's responding, Xerox keeps going up, and they're looking like, oh, they're going to take us over, we'll take them over. If that happens, HPQ is going to be back down at $17. So I'm like, this is, I honestly don't think Faber came out and said that the offer was for 22. It does not sound to me like Hewlett Packard is interested in Xerox buying them. And then they were saying that there was rumors before, or talks before, of Hewlett Packard buying Xerox. So I get nervous that they could potentially flip it, and that's why I sold it. There's too much stuff happening. It was a good gain, obviously, and I had a little run up there that day, the favors of the 22, and I was like, you know what? I'm booking the profits here because I'm nervous. I still like the story long term, but I'm just nervous that they might actually buy Xerox. And then the stock's going to be back down at 17. I'm going to be kicking myself that I didn't sell it and redeploy it. So it gets back down at 16, 17. I would probably rebuy it. I don't know. I don't think this is getting taken over, though, in my opinion.
Yep, and Barron's was echoing the same thing, and it just was the 22 ended up being, it was some in stock and some in cash. So everyone that was buying it at 21.50, 22, without the details of the actual deal out there, didn't get such a deal there. But that was a tell that day that the rumor came out, and basically it sold off the entire day.
And XRX rallied all the way back.
Yep.
XRX in the pre-market that day was down like $33, and it ended up closing green. That was the tell right there. It's like, there's no way. The market, usually figures stuff out. And if, you got Xerox and pay a huge premium for Hewlett Packard, it wasn't going to trade higher. So that's what the rumor is out there, or that's what the offer was. But I don't think there's any chance of Hewlett Packard. Maybe there's a chance, but never say never. But I don't think Hewlett Packard's going to accept that offer.
Do we want to talk pot here?
Yeah, we do.
Okay. Do we have time before Ivan comes on, or
great day for it Friday? Yeah, quickly, 1 minute. CGC, great day. You know what? The laggard trade's on a little bit here. I don't mind the pot stocks on. I talked a little bit positively on Friday show, and then we popped up on Friday here as well. So you know what? I'm looking here. Kronos a little double bottom. There's some life here. Now, again, I'm not saying jump and throw all your money in your investment portfolio into pot stocks. So the valuations are still nosebleed. But there is some life happening. So there's a potential trade here. Kronos, if I was buying it here, I would stop out at that double bottom, perfect double bottom, 786, 786. That would be my stop out now. So if I'm buying on a pullback this morning, because the market's pulling back, maybe get 835, 840, I would stop out below that 786. I do not want to see the thing make new lows. CGC, same story, getting a pullback, although it ran a little bit farther. It's tougher, 1889 all the way up to 2168. But you know what? These things actually showing a little bit of life. Friday, it was a little first life we've seen from pot in a long time.
And just for you Kronos traders, before the bell tomorrow, Kronos report. So if
really?
Yeah.
Okay, well, maybe I don't do that one.
But
I have bad luck with earnings.
Yeah, if you're looking for a catalyst here, S&P's hanging out near the lower end of the range. Our pre-market low is 76.75, just hanging out at 78 quarter, kind of kind of a quiet Veterans Day here with the bond markets being closed. But let's talk to our guest here, Spencer. Who do we have?
We're still waiting for Ivan to join us.
Still waiting for Ivan?
Yep. So
Okay.
let's keep going here. And I do want to hit. We do have a spinoff here this morning.
What do we got?
SunPower, SPWR here, is spinning off a part of its company into another separate publicly traded company. Details here. They're splitting up. They're going to receive a $298 million equity investment as it relates to the spinoff, and they're spinning off a company that's going to be called Maxion Solar into its own separate entity.
What do you think of the solar stocks here? You know,
I
not
don't know.
just SunPower specifically, but they've come down a long ways. They were unbelievable performers through the summer, and it has been an ugly couple of months here. Maybe, you know, it was the leaders to laggards trade, because this was definitely a leader back in September. You know, you look at where SunPower was, and if we just go out, you can see it there. If we go out to the dailies, I mean, just in September, we're up at $15. The leaders to laggards trade has hurt all the solar stocks as well. But at a certain point in time, even like First Solar, like now it starts to get interesting. You know, I was played it a couple times and I snuck out perfectly on that one candle there when I had the news on the tariffs. So I'm not in any solar stock here right now, but I want to be. I still believe longer term in solar. I don't know if it's gonna be a First Solar. I think, you know, maybe we got to get Gordon Johnson here on the show so he can tell me which solar stock, because he covers the show really well. Can we bring Gordo on sometime?
Yeah.
Let's get Gordo back on. I want to know, because, you know, Gordo's helped us a lot on this show. He's actually does his homework, and he's often right. I mean, he's very outspoken, and yes, his price targets are crazy sometimes, but I mean, he's does his research, and he knows his stuff really well, and he knows the solar sector really well. So I think before I give any opinions on which solar stock I'd like to own, I think I want to hear from Gordo again. But TAN, I mean, if you just want to own them all, you can buy obviously the ETF, but I don't know. What are your thoughts here, Joe, in the sector?
Like when I'm looking at this First Solar chart, I'm just kind of like wake me up, you know, like in the middle of 2000. You know, it's been a range, and really since early 17, that range has been 40 to 80. So you're moving into the, you know, lower, lot of monthly support at 40 here, but you know, when you get it blooms off the flower. I mean, you came off that 180 plus high and all the way down under $20. You've been trying to battle your way back. I mean, you know, just bust above 80, and we haven't seen 80 in quite some time here. I'd be interested in this in the lower 40s based on the monthly lows.
There was another headline I wanted to discuss, and I just now lost it.
Let's go to Disney.
Yeah.
You got Disney Plus coming. I was look at the lineup. They got some shows going to be on this Disney Plus. Like I was looking from a kid's perspective. If you got kids, because I look at Netflix and I try to find something for my kids to watch, and there's some shows on there. I look at this list, and you can just Google like Disney Plus, like what's confirmed to be on there. So, you know, I can do that too for you too. But it's an impressive lineup if you've got kids. Like I look at this and I think I might actually pay for this myself. I might actually subscribe to this. This service.
But you got kids.
But you got kids. So, but you know what? If you're a Star Wars fanatic, maybe you're gonna want to subscribe for that. If you know you like your heroes movies, a lot of teenagers like all that stuff here too. But I mean, so because they got all the Marvel stuff, obviously, you know, the Iron Man, the Avengers, they've got all that stuff. I mean, there's just a ton of Spider-Man. Then they got all the Disney Star Wars movies, obviously, and they've got, you know, some of their own original series that they're going to be putting on there too. They have all the Pixar stuff like Cars, A Bug's Life.
You know what? Let's get Ivan's thoughts on this.
Yeah, for sure.
I do want to bring him on. Our guest today, Ivan Feinseth. He is a partner and CIO at Tigress Financial Partners. Joins our show periodically, and I know he does have some thoughts here on Disney Plus and the streaming wars. Ivan, good morning.
Thank you. How are you?
Good, Ivan. I was saying at the top of the show, I just can't wait until Wednesday and the Disney Plus launch happens, and we can stop talking about this because it's been nonstop for the past 2 weeks here. But I guess heading into tomorrow when Disney Plus launches, what are your thoughts on the streaming space and Disney Plus and how that relates to Netflix and Roku, et cetera?
I can't wait to watch the new show, The Mandalorian.
Yeah,
I don't know if you've seen the trailer, but that trailer alone is going to sell a lot of Disney subscriptions.
So there you go,
Disney
Joel.
Plus.
Even it's not just for kids. I was just saying, like the Star Wars, you know, fanatics, and I saw that trailer too. It looks good, Ivan.
It looks incredible, and that's, I think, just a little kind of taste of things to come. By the way, I think that is being produced at 20 million per episode. So there's a lot of money
Holy.
and a lot going into that. It's also directed by Jon Favreau. And then I think in December, they will add Avengers Endgame, which is now the #1 box office grossing movie of all time, surpassing now a prior Disney movie owned by Disney, Avatar. And then we have Avatar 2 coming out, I think, next year. So Disney is the king of content, and content is king in the streaming wars. And I think Disney will out Netflix. I think they will more than surpass their projected 60 to 90 million global subscribers by the end of 2024. I think that they will have over probably 160 million. And the problem with Netflix is not that people will leave, because people will subscribe to multiple services, but Netflix will probably have to start to lower the price or discount or promote more to maintain its subscriber base. For example, right now Netflix is $13 a month. They may say, to try to lock people down, I'll give you, which is $156 a year. If you sign up for 12 months right now for $99, you lock in a lower price. So Netflix is going to have to compete harder on price and promote more to maintain subscribers, and also invest in original content, where Disney's whole business is creating original content. And the other benefit of Disney Plus is it's going to help Disney in all its other areas. It will drive people to visit the theme park. It will drive people to buy Disney merchandise based on Star Wars, Marvel, the Disney shows. The other show I'm interested in Disney Plus is Jeff Goldblum's The World According to Jeff Goldblum on National Geographic, which is kind of where he just wanders around examining different things.
This lineup, I'm just looking through like the confirmed shows here, Ivan, on Disney Plus, and like I've got a 2-year-old and a 5-year-old, and I look at this and I think, man, I've got less, there's so many different movies, like even the animated movies, there's so much stuff on here, the potential for them to watch, like so much more than Netflix, because I've got Netflix right now. And I struggle for my 2 and my 5-year-old to find like, really, stuff that, is safe content for them, because some of these stuff that Netflix has as kids shouldn't be watched by kids. Some of it, there was one like The Last Kid on the Earth, and, it's about zombies and stuff. I'm like, and it's a cartoon, but I'm like, holy, that's definitely should be marked like teenagers, not under 13.
No, I think you can segment stuff for different age groups. You can sign in as kids, but yes, Disney for young children, Disney has the most content, because like Bob Iger said in the launch of Disney Plus that I was lucky enough to attend back in April, he said he took his grandchildren to see Cinderella, and his grandparents had taken him many years ago. So 5 generations of his family have seen that movie, which is still as impactful when it was then as it is today. So Disney's content is also timeless.
All right, one more on this, and then we'll move on to other stocks. Okay. But this, to me, sums it up.
Hey, we got Walgreens news here. We just popped up $4 on this.
All right, let's take a look at.
Sorry about that, Ivan.
Said to make a formal
KKR coming in with the bid.
We just talked about this on the show a half an hour ago, saying I like the setup. Oh, now it's going. Sorry, Ivan, to take over with the.
No, but I actually could segue into, I think the play here is actually CVS. So I'm happy for Walgreens and the Walgreens shareholders, but there's a huge opportunity in CVS.
How so?
First of all, the above market bid on Walgreens highlights the value there, but CVS's business model from the new business model with the combination of CVS and Aetna creates the healthcare delivery and service model of the future. When they merged, you combined one of the largest payers of healthcare services with one of the largest providers of healthcare services. And CVS is innovating on so many fronts, including working with UPS on drone delivery, same-day drone delivery of prescriptions, and these new health hubs. So they're adding minute clinics to a lot of the CVS stores where you can get acute care. And also these new health hubs will be an expansion of a full service medical delivery facility where they can do blood tests and other type of work. So if you have Aetna, will be covered by your Aetna insurance.
All right, let's go on to some other ones. I want to talk about Boeing here. We haven't actually talked about this one for a while on our show. More headlines. Give us an update here on what you see in Boeing.
Well, right now they're looking to get approval to start delivering planes because they've still been making 42 Maxes a month, and they are piling up in the Boeing parking lots. They want to start to deliver them to their customers even before they get FAA approval, so that when they do, the customers can get these flights back in, get these jets back into service as fast as possible. But I've always said you want to buy a good company when they're going through a bad time, which is the case of Boeing. And the key thing is that there's been no cancellations of any of the MAX jets because the airline industry is so capacity constrained that they desperately need more planes. And these are more technologically advanced, fuel-efficient planes that can help the airlines meet the capacity demand.
So you would just set it and forget it? You would just buy it?
I would buy it on Boeing throughout all of this weakness. These planes will eventually return into service, and the stock, I think the day they announce they return to service, the stock will be up significantly, and then probably you could see a new high within 6 months after that.
Yeah,
So
but when's that day going to come? At this point, it's been months.
Well, they're saying now, hopefully before the end of the year.
All right. I've heard that before. Okay.
Yes.
Ivan, is there anything to like here with the Gap?
No.
No.
I think there are a big delineation between good retailers and bad retailers. One of my favorite retailers is Nordstrom. And by the way, when other retailers are closing stores, Nordstrom's just opened a new 340,000 square foot store in Midtown New York City on 57th and Broadway, 7 floors, a lot of shoes, and 7 restaurants. So they also are opening what they call Nordstrom Local, which are very small footprint stores where people can pick up things, return things, and have alterations done, and also have work with stylists to kind of pick out things that are just right for them. So Nordstrom's continues to try new things and grow and open stores while other companies are closing stores. And Gap, just does not have a kind of unique value proposition. They don't have a unique shopping experience, and they don't leverage any kind of real customer loyalty program the way, let's say, Nordstrom does, or even Macy's does.
We're on the line with Ivan Feinseth. He's a partner and CIO at Tigress Financial Partners. Let's talk one of your favorite stocks here, Garmin. And your ears must have been ringing the other day because with the acquisition of Fitbit by Google here, we had some people on the show who were saying, hey, watch out, Garmin. Here comes Google getting into your sandbox. Price action hasn't really indicated about that. Talk about the Google takeover of Fitbit, potential ramifications on Garmin, GRMN.
Good for Garmin. Here's the thing. The fact that Google bought Fitbit and Apple focuses on the Apple Watch and it's all about smart wearables as the really key way people can monitor fitness and health. And Garmin has one of the broadest and most technologically advanced line of smart wearables. So the more companies that get into smart wearables, the bigger the market grows. Garmin, I think, will dominate so many niches. And if you are really passionate about your pursuits, which Garmin customers are, you are going to go to the Garmin brand, the Garmin line of smart wearables, the top end line, the Mark line, or the Phoenix line, or even the Vivo line. And they have smart wearables. They have fitness trackers that start at $80 and watches that go up to $2,500 right now. They also are working with University of Kansas Medical Center to study the data produced by smart wearables and effects on sleep apnea and AFib and things like that. So it is all about the focus of healthcare. And I think Garmin will be the leading niche player for people who have strong passion and commitment for smart wearables. One other thing that was missed in that is that Garmin announced last week this new emergency automatic flight landing system for small planes and jets. Basically, if the pilot were to get into trouble and become incapacitated, he could press an emergency button, or a passenger can press the emergency button. This system will automatically seek out the closest airport and totally autonomously land the plane.
All right, Ivan, I want to get to a couple more here. Let's talk about Yelp. We actually didn't cover Yelp earnings last week on the show, but give us a high-level overview on Yelp. I guess they liked it.
Yes. Well, when companies have a high level of short interest, as Yelp does, and they report some good news, the stocks tend to pop. Yelp is still the go-to site for information on, restaurants and attractions and many businesses. I think Yelp ends up getting bought by either Booking.com or Groupon. Booking.com owns OpenTable, so there would be a great synergy between Yelp and OpenTable. And also Groupon is, looking to continue to increase penetration to small businesses that are very dependent on Yelp's reviews for customer flow.
And then one more here. One of my favorite apps to browse and waste time on is Zillow.
I don't like Zillow.
You don't like Zillow? Why not?
Nah, I think that it's, first of all, they have gone into what you would call the house flipping business, which taking inventory, which has risks. And I think the valuation is unsustainable. And while they do market well, and if you're looking for a house, it's a lot of times going to take you to Zillow. You'll see ads for it in Google, but there are a lot of other websites, including, the multiple listing websites that the realtors use that have, customer portals. So they got competition. It's a highly valued stock. And again, it was one quarter of good news. It has a short interest level of 40%. So a lot of people don't believe in the sustainability or this, they can justify the value. And I would agree. And the fact that they're taking principal risk on homes instead of just being a service company adds to the risk in the stock.
All right, Ivan Feinseth is a partner and CIO at Tigress Financial Partners. Ivan, thanks so much for the time today.
Thank you.
All right, 8:52 here on this snowy Monday morning.
Snowy, I know. Did you tell everybody about the snow here?
Yeah, we got snow, folks. It's heading. If you're on the East Coast, it's heading your way. Is all I can say. It snowed in Wisconsin yesterday, Michigan this morning. So get ready for that because winter is here. It's coming for you East Coasters, but it is here for us in the Midwest here. So, Joel,
is there no school? Is there no school on Veterans Day? I can't even remember. Is there school?
I don't remember.
If not,
there's school on Remember. We call it Remembrance Day in Canada, and we have school. So
okay. Because
fans are in school. It wasn't even a snow day.
Yep. Because Jason was in the chat and he said, "Say hello to Josh." So I didn't know if Josh was playing hooky with Jason today, or you had can't be.
Well, now the school knows that he was playing hooky. That wasn't nice of you.
They listen to the They
probably do.
Robin says we have school and snow. Ivan Forey says school today. So
school day.
School. All right, Josh, you better get to class here. I don't want to get Jason in trouble. Dennis, the Walgreens boots news kind of broke on us.
Can you believe that? We just talked bullish on the show 20 minutes ago about this, and I was like, I kind of like this. I was thinking after the show I might actually buy some of this because I kind of like the setup. And then it breaks during the show. The odds of that. So hopefully some people bought that. We talked bullish about the thing 20 minutes ago. Maybe a couple of people bought the thing, but anyways, 59.24 was where it closed. I kind of like the setup because you had the wild card of potentially a suitor being out there. Well, now we get a rumor that there is a potential suitor out there, so it's up $3. I'm not chasing it now, but I liked it at the close of 59.24. So now I don't know. I mean, now I guess the trade's over. Would have been nice if they would have did that during the day because I might have bought some of this today at 59.24.
Spike to 65 on that. We peeled back $2.50 from there. So we'll see what happened. I'll just use that high from last week. I see that we got over that last week. You got the 64.50, and then today you got the 65. So right now, that's the area. If you rally another $2.50, that's an area of resistance. Though, but when I was reading in Barron's, it was going to take more than the current price where it's trading. So we'll see what happens. See if any other potential suitors come in. I mean, what's Warren have, like 128 billion in cash or something like that? I mean,
is this what he wants though? Like I don't
know
about this. Why do people want this?
That's what I'm
Yeah,
thinking.
it's
That's
cheap.
what I'm
Yeah.
thinking too.
Is that what you were thinking too?
Yeah.
Like
yeah.
this isn't a huge growth industry. It's still under attack from Amazon, no matter, even though the stocks have performed okay lately. But everybody's talking about, oh, CVS and Walgreens, Boots. These are the two stocks you got on. The drugstore is on the corner with physical locations. I mean, they're still under attack. The business models are still under attack here. Yeah, it's in place. I'm definitely not coming in here and shorting Walgreens. Obviously, I was saying I don't mind the setup here because the value trade's back in play. But these are kind of stocks you want to put in your long-term portfolio. A CVS saying, yeah, this is the future. I don't see it. If you're putting your investing hat on, I don't see it.
I can understand the appeal for private equity because there's definitely value if you strip it for parts, but I can't understand why like a Berkshire
would come in and say this is a great business model going forward. Let's have more physical drugstores, because they're on every corner. I mean, how many corners do you look at? There's a CVS on one corner, Walgreens on the other corner. There's a Rite Aid on a lot of these too, and Rite Aid obviously we know has not performed very well at all. It's been the dog of dogs. I don't know. I don't want these in my long-term portfolio. So when I'm talking Walgreens, I'm not saying throw it in your long-term portfolio, great investment. I'm saying I liked it for a trade because there was a potential suitor out there. Well, it's already been announced that trade's over. So 20 minutes later, that trade's over. But I can't see. I don't know why everybody is interested in buying this thing. That's all.
Have you been to a CVS lately? They are so expensive. Everything is so expensive.
And they're selling, think about it. Do you need to go to a CVS? Walmart's selling your Myers got your pharmacies. I mean, everybody sells your prescriptions.
Yeah.
What do you need those for?
Once a month for something or other. And
it's the same thing in Canada. We got the Shoppers Drug Marts on every corner, and they do well. The Shoppers went private there a while ago. Similar business. I mean, I guess, it's your local pharmacy, and they're always going to be business. But I don't see it as a growth industry. I don't see it as like this is something, I think about when I want to invest in, I want growth at a reasonable price. Those are the stocks I love, like the Googles and the Apples. Those are growth at a reasonable price. I just don't see the growth in the CVS. So why do I want to invest in that? That's why I don't have these. If I have stocks and you want yield, and you say, oh, but it's got a 2.77% dividend. If I really want yield, I go buy a preferred stock where I get 5, 6, 7%. That feels better. That feels competitive with the market. If you're buying a stock for a 3% dividend and that's all you're going for, you might as well you can buy treasury bonds, the long term, and you can get that. So I just don't see why you're going to buy stocks for 2.77% dividends, or in Walgreens' case, I guess the dividend's a little higher, 2.92. But yes, they're value stocks. Yes, they're cash flow cheap. They're cheap for a reason.
One more I want to hit on. Have you guys heard about the Starbucks that's opening in Chicago? The world's largest Starbucks, a 43,000 square foot coffee shop / cocktail / roastery / everything. It's going to be opening
in everything.
Opening up on the Miracle Mile on Friday. Magnificent Mile, excuse me.
How big?
My reference is mixed up. The Magnificent Mile on Friday in Chicago, 43,000 square feet.
That's as big as a Walmart.
Yep, it's 4 stories, I think.
Where is it in Chicago?
It's going to open right where the Crate and Barrel used to be.
Really?
Yeah.
At how many square feet?
43,000.
How big is your typical? It's got to be the size of a Walmart. Like when you think about square footage.
It's huge. I don't know.
Bigger than so what are those Supercenter Walmart square footage?
Why is there a need for a 4-story Starbucks?
That's crazy. That's huge. I don't know. I guess just to say they did. Well, Walmart's vary from 30,000 up to 206,000. I've never seen a 206,000 square foot Walmart, but no, wait, that's wrong. 20,000. Average store covering 100,000. Okay, so they're not as big as Walmart, but big coffee shop.
Yeah. All right.
It's a fun story. What about Starbucks chart? Talk the Starbucks chart. It's been ugly.
Yeah, I don't know. I mean, and this news doesn't.
$5 coffee cooling off.
Yeah, I don't know. I mean, it's just sitting at the lows of the move, right? I haven't looked at Starbucks lately here. You better hold $82. Well, you're already under 82. Where are the lows from yesterday? 81.45. I'll go with last week's low at 81. You're finding buyers. This is a kind of chart where you have some patient buyers here. You're working on 3 monthly red candles here. So what did we close last month at? We closed last month at 84.58. So I don't know. I'd have to see it close above that before I get wildly bullish here in Starbucks. Real quick, energy sector look. Oh, I'm sorry. It's 9 o'clock. I just looked at this Apache.
Go ahead.
I just looked at Apache here.
Life.
And someone mentioned in the chat, man, it needs to get to 25. I'm just looking at that as resistance. The high from last week, 25.08. I mean, oil just seems to be in a range. I'm not running out and buying these stocks right
Just
now.
remember too, it's still going to be tax loss selling season coming here for a lot of these stocks the next month. This is a stock that has not been good this year either. All the oil stocks could be prone to a little bit of tax loss selling. Not quite starting yet, but I would say in the next few weeks, you're going to start to see that trend where maybe some of the laggards of the year actually start to get back, because we've seen this leaders to laggards trade. I think, the seasonality of it could make that trade naturally come off, if obviously, unless these things really start ripping and they become actual winners on the year. But some of these stocks are still, even though they've had rallies, I mean, you look at where it was in the summer, it was 37 bucks APA, and you look at a lot of the other oil stocks like Halliburton, it's the same story. I mean, yes, they've shown some life, but this still just feels not much more than a dead cat bounce.
All right, Spencer.
I want to make one quick announcement before we go. And so we've been promoting the Global FinTech Awards next Tuesday. I've been offering a promo code and a discount for the past few weeks. Well, I made some calls over the weekend. I twisted some arms, made some phone calls, and I got a better discount, actually as good a discount as you could possibly get. So I'm going to drop the link into the chat now that goes directly to the Eventbrite page. You go to fintechawards.com, promo code PMPVIP. That does not get you 20% off. It does not get you 30% off or 40% or 50%. It gets you 100% off your ticket.
You guys are crazy. How do you make money just giving tickets away?
Dude, because
we just want to meet people. We're just meeting people.
I twisted some arms. That's what I sold.
You're awesome.
PMP.
To be honest, though, if you're in that area and the ticket's free, like I would totally go. Well, I am going. I mean, I'm flying in to go to it.
Hang out with Joel and Dennis for a few hours next Tuesday at New World Stages in New York City. FinTechAwards.com, promo code PMPVIP. There you go.
This is a week from tomorrow.
A week from tomorrow, yes. So
I better start prepping up some of these presentations I'm going to do. This might be prep week for me.
Me too. So that's my announcement. The links are in the chat there. I want to thank our guest today, Ivan Feinseth. Thanks to all of you in our chats on YouTube and premarket.benzinga.com. Catch our podcast wherever podcasts are available. And please remember, all the information from our show is meant to be used as informational purposes only and not for investment or trading advice. Again, happy Veterans Day. Thanks to all of our veterans out there for your service. Everyone have a great rest of your day. We'll be back with you on Tuesday.